Alrighty. Hi. Hello. What's up? How you doing, everybody? Welcome back to Orb Plus. It's been a week since I recorded any videos or posted any videos or done anything investing-wise. Sorry. I have been handling not only being sick, but I've been handling, what's it called? Juradute. My hands have been tied. I've felt like crap the last couple of days, and yeah, I'm ready to dive right back in. I've had 3 hours of sleep. If you want to know why, I'll have VODs up. VODs, I'll have VODs up for a while detailing exactly why. Be sure to check those out on Orb Plus and Orb's Vault. Orb's Vault you can find in the Twitch description link. Orb Plus, you're here. Just look around. First off, we're in a downtrend. Okay. Do we care about here's low, low? Do we care about this low? No. Why? Because it was past. We have a high here. We have a high here. Yay. Plain and simple. For the day, let's see what's happening. This is in a day. We are technically in an uptrend on the daily. We broke past this high here. Broke past this high here. We broke past this high here. We now have a high all the way up here that we could take a hold of. Let's go ahead and just mark that. That's on the daily. I'm not expecting it to hit that high. That's the most recent high that has not been broke past that we actually care about. The most recent low outside of this most recent low is right there. Plain and simple. We are in an uptrend, so we are going to take that into consideration. We have 1 hour. Boom. What am I seeing on the hour? I'm seeing every value up here. I'm seeing. Ooh, hello. Because we got to remember, we're in the general, like the larger time frame, we are in an uptrend. This is the lowest low outside of this low here that we care about in terms of this general uptrend. If it comes all the way down here, we know the trend has changed for the downside on the higher time frame. We need to keep that in mind when going forward. With this being the case, we're in an uptrend. So right now we're looking for continuations going higher. Right now, well. We're in an uptrend on the higher time frame. We're looking for continuation that price is going to go higher so we can make a decent trade. Buy in, sell. On the hourly, we're moving forward. We're moving on down. We're looking for this high or the next high to close above this. We are not within market hours, so we have legitimately another hour. Yeah, we have another hour before we can reasonably enter. Oh, 5 minutes, see what's happening. Actually, no, we're gonna stay here. We're gonna stay right here because market's gonna tell us what it wants us, what it's gonna want to do. If we have a closure above this high here, we know it's gonna want to move higher. Identify a high, up, down, boom, high there. This is right in line with this. Our entire trade is based on a key level hit. Ooh, hello. Well, let's go ahead and mark this, because why not, right? I mean, it's here, it's presenting itself. We might as well take advantage of it. We have fair value gap right there. So, two things need to occur. First, if we get a closure above the side here, that's awesome. That means we can actually move this a little bit higher. Secondly, we need a closure above this. Why is that? Because this right here is telling us price is going to continue lower. However, price is already hit below this. We're now looking for it to create a new high. And the general trend is up, with the exception of the hour. The hourly is still down. So that is our sign of where price wants to go. What's it want to do? Where is it going to go? The like, right? We're looking for one, price to close above this high here. Right now, it's hit the same one. So we can't say it's going to continue higher because it's a lower high. Right now, the current high that we should be looking for is this one here. And it's a combination of two key levels. We have the fair value gap. It's got to close above, invert, then continue higher, or it'll close up above this high. And then from that, we'll have known, one, break of structure. This downtrend will be over for the hour, and we'll see that on the lower time frames, hourly even. Price continuing higher beyond that, and yeah. So we can count this. We can count this as a high, up, down, boom, highest point between the twos right there. We want a closure above that. That's how we'll know price wants to continue. Oh wait, no, right here. We have a break of structure right there. Boom, up, down, high, boom, closes above it. Yep, continues higher. So this is going to continue higher per this break of structure. Price came down to hit this fair value gap. Yeah. Looks like it came to claim this breaker block here. Said price is going to continue higher, and sure enough, that's what it did. So this filled a breaker block. It didn't disrespect it though. Breaker blocks are signs of continuation that price is moving higher. So for it to fill that breaker block in the past means price is going to be moving a lot higher. With that being the case, that falls in line with what we were wanting it to do, right? If we wanted to continue higher, and that being the case, I think that's what we're going to get, because it filled that and it didn't go lower. We have a closure above this recent high here, which is our break of structure. Now we're looking for it to close not above this key level, but above this high here, this high specifically, and above this fair value gap to inverse it So we know price is going to continue higher. On the 30-minute, we have a mini fair value gap here. It doesn't pop up on the hourly. But it's good. Registerable notion. Boom. On the 30-minute, that's actually quite apparent. And it encompasses the key level we marked here, the highest high of London session specifically. If we can get a closure above this key level, we'll move it higher. We want to pay attention around this line here for our candles to close above not only this, but so we can move it, but we want it to close above this fair value gap, and we want price to continue higher above this level here and above this fair value gap. Because if it closes above this, we know price is going to move much higher. Of course, before that can happen, we need it, one, to close above this, and two, to break out of this, come back down, touch this key level, right? Because at that point, it will have swept this liquidity, and from that liquidity sweep, we can enter on the market and watch it continue higher. Is that bad? Is that the bad way of looking at it? In a downtrend, market makers in the algorithm use the resting orders above recent highs to fuel their chain down because there's a lack of buy orders in the market. Price wants to continue lower, they'll use the orders above this to fuel the lack of buy orders and push sell orders to get filled on down. Let's check the news. What does the news have for us? Because there is nothing today. Absolute squat. Sweet. It is hot here. Hang on. There's probably a 5 to 10 degree difference between sitting right here and walking through that door. My PC has not been on all day, all night. It's quite hot in this room. It gets hot fairly fast. Anyway, for the month we're up 11. For the week we're up 2, almost 3. I went again when I said I've only had 3-ish hours of sleep. Let's take a look at Trade Locker. Do the same thing, get it nice and locked in. Oop, hello, we got a closure above key level. And we are before our time to trade. We're just going to move that up a little bit. Keep an eye on this fair value gap. This is a 30-minute fair value gap, so we're not going to pay entirely too close attention to it, though it's a key level to recognize. That is a potential sign for it to continue higher. We just want to wait. There's the hourly on that. We'll move on down to the 5-minute real quick. $9.50. Boom. We have a 9.50 candle here. This is our within time to trade, right? We'll stick between these two lines when we try and enter. From this, we want to go back up to the hour. We'll watch this ever so patiently. Smell. Let's move back up to the hour on this. Okay. Here's what I want to do. I'm going to help myself out for a second. What I'm going to do, I'm going to save both of us some time, right? Because I recognize you don't want to sit here for an hour. I don't want to sit here for an hour, but I don't really have a choice. I'm going to sit here for an hour. What I'm going to do is I'm going to pause the video. So for you, it's as though I could snap my finger and we go from point A to, look at that. We have not only a breaker structure, we broke past some fair value gaps, we know what we're doing, and from there we could just enter on trade. We're looking for an entry point, and it'll be probably within these two. Yeah, I'm going to skip to that point in the video, so that way it's fairly easy to recognize what's going on. With that being the case, we'll be right back. Okay? Okay. We're not. Okay. Can hear me. Good. So, I'm not looking to take a trade just yet, but I wanted to take a note on something. The live data version of this chart, so trade locker, right, is displaying this candle here. That's a red one, which means it's a false high. I am aware of the different data packages that come with TradingView and other brokers. I'm aware of them. So much so, I am putting a rule out for myself now to trust the live data packages over this. Why? Because this is delayed data, right? This is 10 minutes in the past that we're looking at right now on TradingView. Trade Locker runs on a variant of TradingView where the data package has caught up to real-time trading. This allows for more accurate entry. This allows for more accurate data. I am happily going to trust Trade Locker when it comes to reading the charts. Why? Because it is the most current data that we have to go off of. With that being said, we're also going to pay extremely intrinsic close attention to what market has to do. So in the end, when we go to take a trade and leave the trade, we know not only where we're going to enter based on precise movements after we hit key levels, but we'll also know where to exit based on the minute time frame, the one time frame we're entering on. So we know not to stay in the trade longer than we need to. With that being the case, I'm looking at it now. This right here is a red candle, which means this is not a high we can look for to break up above for a break of structure. With that being the case, the fair value gap that is right here is still valid. Yeah, that is 100% still valid. This fair value gap is the valid one. So if we want to see price continue higher, not only will it need to break above this high here specifically, but it will also need to break above this fair value gap. It'll need to close above it in order for it to disrespect it, to break out of this downtrend we see ourselves in. And so we can see price continue higher. It'll be a large candle move up. I just wanted to put that note out there because I know, not last Friday, but the Friday before last, the last time we took a trade, I was confused because I looked at the chart, I looked at the market, and TradingView had one set of data, right? Prime example, we saw this high here. And from that high, we thought, okay, if it broke above this, market's going higher. Why? Because that's the break of structure. That tells us that this move down is over, or it's wanting to be over. So we ought to wait for this to get hit, wicked, but not closed below, wicked into, and continue higher. We were wrong to assume that this was correct. We lost that trade. So now I'm trusting what I am aware of most, and that is the differences between data packages to attain a better entry point on today's trade. That being the case, we're going to pause up again. We're going to let it continue on. We have not broke above this high. We have not broke above this fair value gap. I'm watching the Trade Locker app very carefully. So we have live data being put into our chart work, right? And from there, when we have identified a feasible entry, when we see our first building block get hit and present itself, that is when I'm going to unpause the video. That is when I'm going to explain what exactly I'm going to do. Once we see our key level hit, we want to see it hit. And as a result, we will wait. Be right back. Note taken successfully, and my ad. BRB. Okay. So, I'm on the NASDAQ now. I'm looking at price pushing higher than our key level here. This is on the 8 o'clock candle. We have boom, boom, high there, right? And, well, first off, this is the highest point that the NASDAQ has to offer, right? Most recent high gets pushed past, wicks it. I'm considering this a liquidity sweep here. The sweep is a sign of reversal. Price is continuing lower, right? From this, we should see price continuing much, much lower. On the 5 minutes specifically, we're looking for SMT divergences. There is a difference. So the NASDAQ is currently lining up with the live data package. It's showing that this is a lower candle, like it's moving a move down. And from that move down, it matches on Trade Locker for the S&P. So, that being the case, we have we don't have a divergence. What I am looking for is either an inverse value gap to appear, which we'll see it in S, or a break of structure, or I'm not seeing an S&T. So yeah, not seeing S&T. No S&T. Okay. So we're looking for a break of structure or an inverse value gap. Right now we have a whole bunch of higher high, higher low, higher high, higher low. We just broke past this high. We didn't break past this high, actually. We had our break of structure created this high here. Did not close above. We broke structure here because it closed below this low. So we're back in a downtrend. We wicked past this high here. Now we're looking for price to continue much lower in that general downtrend. With that being the case, we're looking now for the inverse for value gap here to signal price continuing moving much lower. The continuation confluence confirms that this is a liquidity sweep. If this is an incorrect notion, if this is not a liquidity sweep, we should be seeing a break of structure back to the upside, which means it'll close above this high and continue much higher. At which point we should be looking for price to continue above this high, potentially close above this here. It'll be a large candle wick up. So far, we're getting our inverse for value gap the way we're wanting it. That confirms this is a liquidity sweep on the 5-minute. With that being the case, we'd be moving on to our continuation confluence. We need a fair value gap, breaker block, order block, or equilibrium. Our breaker block is a failed retrace, and order block is the move that causes a liquidity sweep on this low here, if I'm not mistaken. This, actually, the order block would be that move down, sweeps this low, and then continues higher, which means we'll be looking for it to continue lower, right? Even down into this. Or fair value gap, which is indicative of past this point, past this low here, fair value gap continuing lower. Once we identify one of these three, or for price to continue in an equilibrium, it'll come down into this midway range and then bounce back up. With that being the case, we'll be looking for the breaker structure or inverse value gap on the 1 minute to determine price moving, to determine where price wants to move after. It will confirm the continuation confluence we identified earlier. That'll give us the best picture possible to enter in on a trade and continue from there. On the hourly, we are in a downtrend. We're in a retrace. We just wicked past a high on a lower time frame, but we have not broke past the most recent high. So we are still in a valid downtrend for the hourly. On the 30-minute, same story. Not breaking past this high, we wicked past it, waiting for it to continue lower. The daily, we are in an uptrend on the daily. Plain and simple. This says price wants to continue higher, and it has continued higher. We are now in a retrace back down. How far down? I imagine it'll probably come within this fair value gap here. It'll probably wick this right here. But for right now, we're in a retrace. So for the 5-minute, we come up to this. We're going to get off of the NASDAQ and come back over here because this is the chart we're wanting to trade on. Same story. We actually, that is the S&T. So on the that is difference. That is a stark difference. Per this S&P though, per the same chart on live data view, this is very different. The data is the same. From this point here to this point here is the exact same, right? But the NASDAQ is showing difference. We're on the 5-minute for both. The moves are relatively the same, but the margin is very different. or the S&P says higher, the Nasdaq is saying lower. Hmm. I think price is going to continue lower, and it is continuing lower for the live data package. That is a wild change. The lows are the same. These two right here are the exact same. Okay, so generally speaking, let's go ahead. Because I can't hear past my own thoughts outside of this right here. So looking at this entire move as well as the live data package stuff. I'm gonna stop saying that. I'm looking at trade locker. We are about to inverse this fair value gap. We need a closure below it. That would be this one here. This fair value gap is about to be inversed. We're waiting on it to get closed below. Assuming this gets closed below, we're gonna watch it. We're gonna watch it very carefully. Assuming that gets closed below our inverse fair value gap confirmation that yes, this was a valid liquidity sweep, or not liquidity sweep, but that this was a valid key level that was hit. It'll confirm that price is moving further down, right? And then from that, we look for a continuation confluence. If we see a fair value gap in either direction, we know it's a continuation either higher or lower. That's after this gets closed below. This fair value gap gets closed below, inverting it, right? The inverse fair value gap essentially says we're not moving higher because that's what the fair value gap said. Instead, we are moving lower beyond that, right? That's what the inverse fair value gap is. So we're looking for a second fair value gap to form down here past this in order to have that continuation confluence. We're also looking for either a breaker block, order block, or equilibrium. A breaker block will form in the retrace back up. It'll fail that retrace and it'll continue down. When it continues down, we'll see the order block form along this here, sweeping this liquidity. When we see that, will be after the final confluence of break of structure inverse fair value gap. We'll see it break structure on the 1 minute. From the down, we'll see it break structure, or it'll break structure and then we'll see an inverse fair value gap, right? And then from that, we'll continue on down. Because we want to get it back up into equilibrium for the right price to sell at in a downtrend, so we can sell it for the most and buy it for the least and make money off of the down. I think this is the correct notion. I think this is correct. I also think I need to wait. Because we took note all the way up into this right here. This was our key level. And though it was hit on the 8 o'clock candle, right, we haven't seen it get hit a second time. I think it's best of us to wait for this right here to get hit. If this doesn't get hit, then we'll keep up with the confluences. We'll keep up with everything. We're going to watch very carefully as to what happens these next couple of candles. Because either I'm correct in that this is a sweep and our building blocks say yes, price is continuing lower, or I'm wrong, price is continuing higher per this general uptrend on the 5-minute, even though we're in a downtrend on the 1. Yeah, I want to see. We have an inverse for value gap on the 5-minute. That is a valid inverse for value gap on the 5-minute. We got an inverse for value gap on the 5-minute earlier. It's a fair value gap continuation. I'd be looking for a break of structure on the 1-minute in order to enter off of it, or an inverse for value gap. One of the two. I think that'd be rushing. Let's wait, shall we? Let's look, let's see, let's wait patiently. Because per this, right? Actually, this would be wrong. That's the most recent low it's got to go into. It's from the most recent high to the most recent low. Here. We're looking for a price to come within this and either continue on down or continue higher. Right now, this is all over the place. Market doesn't know what it wants to do with this here. So on to we could do that right there, but I don't think that's going to help us out. That's the most recent low, the lowest of the lows right now. That's the most recent high for this range. I think this is extra. I think this is a distraction. We're going to remove that completely. This is a fair value gap. We want to see inverted. I don't think we're going to see it inverted on this chart here. I'm tempted to say let's not trade today and let's take this as a learning experience because I want to get fine-tuned to a point. I want to know where market's going to go based on the 8 o'clock line. I understand it's not always going to be 8 o'clock, but in this instance, this is like a perfect prime example of me trying to figure out where market wants to go based on this is a key level that was hit, right? Because up until this point, we were in London session. We were in pre-market, right? I'm trying to find the best entry. I think I've already made a mistake considering this a key level that was in fact hit. I think I'm wrong in this. Though we did hit the key level there. That was a high made. If this closes in the next 30 minutes, that'll be that high made. We can't consider this a break of structure because of the live data. We'd still move on to the 5. 5-minute would need to display to us an inverse fair value gap, a break of structure, or an S&T divergence. Well, we were in an uptrend. We haven't broke structure yet because the most recent low to this high is right here. This low would need to be broke past, closed below in order for it to continue on down. So we can't see a break of structure yet. So aside from that, we're now looking for an inverse fair value gap to be formed. I thought this right here would have been a fair value gap. This right here is a fair value gap. It is. No matter how small it is, that's a fair value gap. It got closed below. We're seeing price continue lower. That's an inverse fair value gap in my eyes. We have a. That's not fair value gaps we can consider. So I think that's what we're waiting on now for the 5-minute. Instead of that being a fair value gap the way I thought it was going to be, this is simply us waiting. We have an inverse fair value gap. So we're still waiting on either a fair value gap, breaker block, order block, or equilibrium to fall into. If we were to consider this, what we were talking about earlier with the equilibrium, we'd go from here all the way down to this low here. Boom. Price would have needed to come down into this and continued higher, but as you can see, it's disrespecting equilibrium, so we can't rely on it right now. I don't want to rely on equilibrium right now. I want to wait. Patiently, I'd like to wait. Not even going to do it on that. What I am going to do is this. I'm going to draw a box encompassing that fair value gap you're seeing on the screen now, because it is valid. So far, I'm looking at it being respected. A respected fair value gap means that it is in fact going to continue higher. We have 1:30 for this to close. Let's see what happens. I guess we have a break of structure because we were in an uptrend, right? Lower low, right? And now we're seeing this here form, and this was closed below this low. This was our break of structure that we were looking for. Oh wait, no. We need to be careful. Inverse fair value gap, break of structure. That works for the confirmation that this right here was a sweep. And so, key level hit. We want to see price continue higher. Plain and simple. With that being the case, we're waiting patiently. All right, so we have a reverse break of structure. So this right here is a green candle per trade blocker, right? As a result of this closure, we have a high. This next candle closes above that high. Remember, up, down, highest point is here. Closure above, break of structure. Back to the upside. It's not a fair value gap, though this fair value gap was respected. We see price continuing higher from here. I believe this being a respected fair value gap says the continuation confluence is gold. It is good. From here we move on to the 1 minute. If the usage and everything's correct, we'd be looking for a break of structure, right? Because it's off that candle that we see a confirmed fair value gap being respected. From there, we'd be looking for a break of structure or an inverse fair value gap, confirming the continuation confluence that price is in fact moving much higher. We got, yeah. I'd like to buy in because we have an inverse fair value gap. We also have, well, you know what? How about this? Let's wait for the break of structure. I want to see it break past this high here. But you have to remember we're in a downtrend. So it's not going to continue much higher. So if it does, that's okay too. We have fair value gaps on the 1 minute saying price is moving higher. We have not broke structure out of the down of the 5 minute yet though. So we're simply waiting. Comment below, would you guys like to see me work out on this channel? I'm strong. I look mid, not buff, not fat, but in between the two. I don't really work out all that much. I'm willing to consider doing so. It won't be as a live or anything. It'll be more recording. I'll do like, I don't know, 20 of a rep, and then from that, like, back out, do 20 of something else. Make it into like a 30-minute video of sorts. If it keeps me in shape, yay. If it gives you inspiration, some content to work on, watching, yay. Let me know in the comment section below. If you like the video so far, give it a thumbs up. Subscribe if you're new on the comeback, or honestly want to see more of the trading journey I'm on. Really am looking forward to making some income off of this. We broke structure past a mini high made within this candle. We want to see it break past this high specifically. It has not broke past it yet, though. We have a valid fair value gap that was just formed on the 5-minute going up. If one of these 3 next candles decides to close above this most recent high, I am 100% entering on a buy position. It's got to close before I can enter. We'll enter on both Trade Locker and TradingView, just so we're on the same page. Have the inverse value gap. Just waiting on that break of structure for the high time frame. Closure above. Pressing buy now. I'm gonna be honest, not confident in this trade. Why? I'm seeing a lot of up, down, up, down, up, down, up, down, up, down, right? Trying to think very carefully though. So we had the break of structure, right? We broke above this high here on the 5 minute. I went down to the 1 minute, and what I did was I waited. Not for break of structure down here, though that would have been smart because we identified that this was a respected fair value gap on the 5 minute, right? Because we saw this here. This says it was disrespected, but on the live data, it says it was not. It closed right on the line, but it didn't close below it, right? Because of this being respected, we saw price continue higher, which is gold. This is what we wanted. We assumed that this was a respected fair value gap, right? And then from that, we watched as price went up, inverted a fair value gap here, right, for the 1 minute. Remember, it came down, closed on this line. From here, we watched all the way up to this. Boom. Inverse fair value gap there on this candle. From that inverse fair value gap, what I wanted to do is I wanted to wait. I wanted to wait until it closed above this high here. And I wanted to wait for a double confirmation. I wanted to wait for this right here to get closed above. This way, we would have been able to enter here. Yes, it would have been at a bad price, but from this entry, we would have known that this downtrend was over. We're continuing higher. We're going to make a new high. From this new high, we need to be paying attention, right? I want to pay attention to this because at that point, we need to be aware past this high. We need to look very carefully for exit points. Here, here, all the way up here, and even, you know what? Let's put one here as well. Because I'm not confident in this trade at all. We're going to do the same thing I just did on Trade Locker. We're going to do it on this. We're going to press buy. Boom. We're going to put our take profit, our final take profit, all the way up there. Right? We're going to take our stop loss. Yeah, we're modify that. We're going to take our stop loss. We're going to put it right underneath. That's terrible. That is a terrible trade. Let's put it here. 50-50. I hate this trade. That is absolute garbage. This is probably the worst trade I've ever taken. It's a bad trade. That is legit even split down the middle on TradingView. Trade Blocker is a little bit less. I don't want to move this. I want to say I want to lose this. That's a terrible notion of me, but it's a lesson learned. I think this is too close to where we entered here. Price is just above this red line here. This was our initial, this is London high. That's what this is. Let's change this color so that way you can see it clearly. This white line right here, that is London session high. This is an awful trade. I'm confident in the confluences we identified. I am not confident in setting a take profit for a trade like this in an uptrend fashion when the hourly is a downtrend we have not broke past. So it was executed. We were taken out by spread, it seems. Yeah. So we bought in here. Yeah, we were taken out by spread. Okay. So, bad trade. Very bad trade. That was awful. Why is it still tracking unrealized? Did we not just lose the trade? What the heck? This is NASDAQ. We didn't lose the trade. It's this right here. I was on the wrong chart. I almost made a mistake. Big oof. I almost made a big mistake. Oof. Okay. From here, we're going to do this. Take profits all the way up there. 30 minutes. That's set up correctly. We're going to do this to the 1 minute. Boom. Reset. Go there. Gold. Uh-huh. Open up. Wakey, wakey, eggs and bakey. Price is moving higher. Oh, so very slowly. It's a crawl higher is what this is. That's the kind of trade we're looking at the moment. I am risking on this trade per trading view $14,794 if I'm not mistaken. This is a bad trade. Just awful. What could I do better? I need to figure out how to identify which way I want to trade. I know how to identify trend. I know how to identify on the daily. Ooh, look, this is a downtrend, and look, we broke structure. We're going in an uptrend, and then on the hourly, we're currently in a downtrend for the most recent sessions. I understand this. I understand how to identify the most recent trend. Trading with trend is the tricky part, because I'm seeing this here, and my hope is that it breaks past this high here. That's the general hope. If it breaks past this take profit, I'm willing to go even higher. I'm willing to go all the way up here. This is a much more interesting trade. This is a much more neat trade. However, it's also a bad trade. Why? Because our stop loss is so freaking close to this. This is terrible. Realistically, if I were to do this right here, that's not any better, because that's like 50-50 again. Not fun. I think it's best to look at this on the 5-minute. Go off of a fair value gap like right in there. That's a more adequate trade, because this is half and this is double, which works for my opinion. Works in my opinion. We would have been stopped out already had I left this the way it is, because I'm looking at price just dipping right now. It's not fun. I think it's best if we rewind to here. We have the hourly, boom, right? On the 8 o'clock, we hit London session high, key level, right? From here, we go down to the 5-minute. From the 5-minute, we identify two things. One, we identify inverse fair value gap right here on this candle. We have fair value gap from the bottom of this to the top of this. That's valid, regardless of this candle. This is valid on both TradeLocker and TradingView. Inverse fair value gap. This says confirmation that this key level was hit. Two, we're looking for a fair value gap. Fair value gap was formed on this candle here. No, that's hard to see. Wait, no. That was the confluence. What am I high on? I'm sorry. So we had fair value gap here that was respected on the live data version of this same chart. Respected fair value gap says continuation, price is continuing higher. Okay, from there, we went down to the 1-minute and we waited for triple confirmation, which was a bad idea. We wanted to see this fair value gap respected. We wanted to see an inverse fair value gap, which is what we got here, right? We had a fair value gap here that was inverted. Cool. But we also wanted to see this high right here get broke past, which we didn't get until just recently. We entered on TradeLocker on this candle here. See the problem? And this was all under the notion that we wanted to see price continue higher, which is what it's doing right now. It is continuing higher. It's continuing higher on TradingView. It's not continuing higher on TradeLocker. Big oof. Very, very, very big oof. I done goofed. Sorry. It probably would have been smarter of me to wait for the drawdown, take a trade, and then watch it soar higher. We're going to wait, though. We're going to let it do its thing. We're going to wait patiently, because I'm a believer. I'm confident in my decision making. We see and saw that price was going to go higher. We understand we are in a downtrend. We understand that this is also a very bad trade to take, because one, the take profits are ridiculous. This is not a good setup. this being bunched up the way it is, in my opinion. And the most recent low we have to go off of is right here. This is set up on a fair value gap from the 5-minute. Not very smart of me. On TradingView we entered in on this candle here. My nephew came in. Thought he was gonna say hi. Here's what I'm gonna do. I'm gonna pause. I'm not gonna touch the stop loss anymore. I'm not gonna waste any more time. What I'm gonna do is I'm gonna put a take profit and stop loss on this. I'm gonna leave it alone, and I'm gonna let market do its thing. I think price is gonna go higher. Why? Because of the daily. I think it's gonna go higher. I understand this could be a mini retrace. I also understand price could simply go much higher. Plain and simple. This says price is going to go higher. It has. Honestly, price continuing to go higher. This right here even says price is going to go higher. That's what we're looking at. That's what we're waiting on. With that being said, let's go ahead and go to the 1 minute and just watch. BRB. Okay. We were just stopped out. I'm looking at it for him now. There we go. Just got stopped out twice. The trade idea was wrong. My lesson, my takeaway from this, my understanding. We didn't lose crazy, but that's okay. We were understandably watching, paying attention to it. So, what exactly happened? One, I made the mistake. I made a mistake. My crucial mistake was I looked at this and saw key level hit. That was wrong. That was incredibly wrong of me. I'll pause this now because that is in my eardrum. One, we saw this and thought key level hit. Let's go ahead and take a trade off of this. Woo. We made a mistake. That mistake being nothing up until this point here said price was going to go higher outside of a fair value gap that was disrespected here. This was very clearly disrespected here. On the 5-minute for trade locker, let's just take a look. Unbiased look at things. Okay, so I was wrong. My eyes fooled me. My waking up eyes fooled me. It was disrespected on both trade locker and TradingView. Oops. So I made 2 mistakes. I didn't bother double checking. I assumed, based on what my eyes said and saw on the 5-minute, I was zoomed out view, that was a respected fair value gap. I was wrong. Because it was disrespected, that throws off all the other confluences. Because that's not a continuation confluence. That is a disrespected fair value gap we should have seen from the get-go. We had an opportunity. We had one. On the break of structure here to reverse the position, right? To admit that our idea was wrong, to place a sell order here, and to watch it plummet. We had the opportunity here. We did not take it because it was already too late. By the time we got the break of structure, we were stopped out. The break of structure occurred on legitimately the third candle. So on trade locker, this right here is the green one. Oh, no. Let's see. Yeah. We entered on this candle for trade locker. We entered on this candle for trading view. This is a green candle on trade locker. Red candle on trading view. 1, 2, 3. This candle specifically broke past this low and stopped us out at the same time. On the 5-minute. Right? At the same time, it broke structure and stopped us out. That bad of a trade. So we couldn't have reversed it. We couldn't have admitted our idea was wrong and tried or attempted to fix it. Instead, it fell through. One, I need to identify the trend. I need to hone the skill of saying this is the daily trend, it's in an uptrend, but the hourly is saying down. We have not broke structure, down. I need to wait. I need to be patient. Hang on, let's do the same thing here. On the daily, might be up, but on the hourly, down. We have not broke structure, down. I need to learn to wait. No. Back to the hourly. I need to learn to wait. Not for this candle, but for this candle to form. Not completely, because as you can see, it's still moving, right? This candle and its wicks and its body determine, for me, is going to be the determining factor on what and where I'm going to take a trade. Combine this one candle, the 9 o'clock candle at the start of 9 o'clock, with the trend to determine the direction I'm wanting to place a trade for. Okay? That's my takeaway from this. Secondly, combined with this, on the 5-minute, for both charts, per trade locker, I need to look for stuff like this right here to occur, where we have a key level hit here. We cannot count the 8 o'clock as a key level hit. We wait for the retrace, a hit here, right? This is what we're waiting on, for this key level to get hit. Second time. We want to see this get hit a second time, and then from here, we want to understand that this is the liquidity sweep. This would have been our breaker block. This is our order block. This is our liquidity sweep. From this, we know the reversal is tried and true. It's going to continue down. This is a downtrend. This is a mini retrace on the hourly time frame downtrend. I need to be very, very aware of situations like this. I need to identify more accurately where trend wants to go. I need to identify more accurately where I'm going to enter based on trend. That is my takeaway from this. Let's see what tomorrow has to offer. Tomorrow there is no news tomorrow. So tomorrow there is an ample opportunity for me to trade again tomorrow. I'm not going to take another trade again. This is my lesson. This is my takeaway. This is me learning this. I need to get better at this. I need to get better at identifying the trends and entering based on those. Plain and simple. We lost today's trade. We lost what? 200 and not 200. What did we lose? Where's the history? Can't do that. This is the trade journal. Okay, so it's a simplification of this. So we this is where I bought it. The order was successfully placed. It was then executed, which means I got what I paid for at the price I wanted. I modified the take profit position to here. Successfully did that. Modified the stop loss and take profit after that because I had to take the stop loss and set it. So this is my stop loss and take profit. There was about $12 of difference. This was when we were at 50-50. Place confirmed, gold. From there, I modified it again to take profit. I then changed a little bit higher. This was where we then saw the 50-50. And then I did this. I took the take profit and shot it way higher. I put $100 worth of difference between the two. This was on the hourly time frame. We saw it go much higher, and this we left alone. And then we took the take profit or the stop loss, sorry, and then we modified it to where there was a little bit more of a gap between the two, with a reasonable stop loss. From there, we watched price continue on, and from here, the order was executed because we were stopped out. It hit our stop loss, which makes sense. I like that this is a feature of TradingView. This actually helps me out to understand what exactly happened and when. So, we got stopped out, plain and simple. We lost that much. $44? Oh, right here. We lost $662.50 on this one. Big oof. Bounce before, bounce after, realized profit and loss. That was today. Big oof. Big oof. I now know what I need to improve on. I now know what I need to do to fix this mistake, this problem I've got. That is patience. That is time. That is me waiting. We're going to be a better trader tomorrow. By far, we're going to be a better trader tomorrow. I hope you guys enjoyed today's video. Give it a thumbs up, subscribe if you're new on the comeback. Comment below what you thought of the mistake I made and whether or not the takeaway was worth the takeaway. Because I honestly think we could have made a decent profit off of this here. I still think we could have made a profit on the uptrend because I'm looking at it. We're not breaking out of the structure here. Technically, we're still in an uptrend. We broke structure off of this, sure. And we haven't broke past this high. I also need to get comfortable with setting stop losses and take profits. I'm beginning to realize. So over the week I had of just sitting and waiting and working on jury duty and being sick and all that crap, I took the time to watch some YouTube videos on setting take profit and stop losses, but I still don't quite, I'm not fluid with it, right? I understand the take profit is supposed to start with the most recent high that was made, right? Or the most recent low that was made. And based on the time frame we enter on, so on the 1 minute, because of our confluences, right? We'd be looking for, let's say we entered up here again, we'd be looking for every single low throughout this to take profit on. But we'd be also looking for a strong reaction to actually make a decent amount of money off of from the get-go. We'd have looked at this as a sweep or a key level hit, and from there assumed price was going to go lower. From that, because we're in a downtrend, from that we would have seen this leg down, made a decent profit, we'd have swept a take profit here, and we'd have targeted all the way down to this session low for a take profit on this time frame. The stop loss, though, has me a little baffled, right? Because we would have waited for this to come up, entered onto this, right? Or I'm sorry. So per the hourly, we would have seen that. We would have gone to the 5 minute. From here, we'd have identified a inverse or value gap, break of structure, yada yada. You get the point. We didn't get any of that in this. Instead, we got a break of structure, and by that point, it was too late, right? This candle closed. We would have entered on a sell position, and from here, we'd have waited. We'd have targeted. We could have targeted that low. We could have targeted this low, all the way down to this, right? Assuming in the next 5 minutes, this candle right here closes and reveals to us a fair value gap that says, yes, price is continuing lower, right? That would have been our second sign of confirmation. There we go. There we go. There we go. That's what I'm looking for. Fair value gap, sign of confluence, confirmation, continuation, right? From here, we go down to the 1 minute. And then from there, look for an inverse or value gap, enter on a sell. That seems so much easier to identify. I'd have been 100 times more confident in that. I'm mad that I did not get that trade. I'm not going to trade again today. You get the point, though. We'd have made profit throughout all this. But I'm looking at this right here, more so, right? Because we have this to target. Where else? Could we have targeted this? What about this? Any of these? Not entirely sure. Let me know in the comments, experienced people of TradingView and day traders, Redditors? I don't know. Let me know what you think. Are those acceptable take profits for on this time frame? I understand that on this time frame, there's only a limited amount I can actually see. Trade Locker's another beast altogether because you have a small screen. You can only go so far with. You don't have something like this. You can just keep scrolling with. Yeah, let me know what I could do to improve, because I think I'm going to stop thinking. I'm going to start saying, I know I am bad at this. That is what videos like this are for. Losses are not losses, they are lessons learned. I'm going to quit yapping now. I'll see you guys in the next one tomorrow. Peace out.